Welcome to Umber Talks, a real estate podcast. We're here to learn, share, and explore ideas with the best in the industry. Enjoy. Hello. Today, we have on the Umber Talks podcast, Marcus Mitchell. Marcus is the co-founder of Shire Capital Management and Shire Farms. So this is an investment fund. Their focus is to acquire and scale premium fruit farmland assets in Canada. But they don't simply buy the farmland. This is what makes it interesting. So they partner with these top farm operators and they build in these integrated farm businesses within highly specific niches. So we're talking about organic blueberry production. We're talking about sweet cherries. This is the fruit sector that they focus on represents less than 1% of Canadian farmland. So it's very specific, very niched. And it's an asset class that's historically uncorrelated to the NASDAQ or the S&P 500 or even short-term interest rates. So they're buying businesses with a somewhat of a moat around them that protects them from the overall economy. So very interesting stuff. They originally launched in 2021 with a single organic blueberry farm. And within a few years, they scaled up to about $50 million in assets. And they exited their first vehicle with about a 36% net return to its investors. So this is a conversation about capital allocation, farming, healthy foods, and long-term compounding. And we are the Umber Talks podcast. We're powered by Umber Realty, an independent real estate brokerage out of Ottawa and Toronto. So we work across every facet of real estate: luxury residences, land development, urban condominiums, commercial investment properties. And through this podcast, we bring together leading academics, seasoned practitioners, and bold entrepreneurs. And our guests, they come on, they share their ideas that drive innovation and shape the future of the real estate industry. So why did we do this episode with Marcus? Well, there are many facets of real estate. And at Umber, we talk constantly about land in different ways, whether it's urban infill, development sites, luxury residential lots, commercial property. But we're surrounded by this vast amount of agricultural land. I mean, it's everywhere. And yet very few of us truly understand what farmland is from an investment standpoint. So when I heard what the team at Shire Capital Management was building, I knew it was different. And I was intrigued because they weren't just buying farmland. They were building scalable, integrated farm businesses in highly specific niches. The organic blueberries, sweet cherries, this niched, very niched area, making up a small portion of the farmland industry in Canada. So Marcus and I were introduced through a mutual friend, someone whose judgment I trust deeply. And when I'm introduced to good people by good people, I tend to lean in and I get curious and I want to understand what they're doing and how they're thinking. So this episode was all about learning, just learning how farmland behaves, how it's different from other real estate assets, learn about the revenue sharing and how this works with farmland operators, what quote, buying a balance sheet optimized for scale actually means in the farmland space. And I mean, we're surrounded by farmland, so I wanted to better understand it. In this episode, you'll find, Marcus shows us some of the freeze-dried blueberries from the farms that he's involved with. We talk about just healthy food production in general. We talk about Michael Matheson from the Montreal Canadiens and why he's getting involved with Marcus and Shire Capital Management. So it's just it's jam packed with lessons from what I believe to be Canada's absolute leader in fruit farmland investment. So without further ado, meet Marcus Mitchell. All right, and here we have it. Marcus Mitchell of Shire Capital Management here with us today to talk about well, let's just jump right in. Marcus,
Hey, love it.
tell us what you're doing.
For sure, man. Shaun, thanks for having me. It's great to be here. And yeah, at Shire Capital, we're really focused on investing in healthy farms. That's our tagline. And what that means to us is really owning farms and farm businesses that are growing the healthiest food possible right here in Canada. Um, what that means specifically is we started really in the organic blueberry space. We've expanded into the sweet cherry sector. This year, we've been moving into honey, apples, and well, we'll see. We've got a couple things in the pipeline, but so far so good.
And to me, it's just I've just really been looking forward to this conversation because it's so different,
Likewise.
and it's obviously like uh, real estate related or right into
Right.
the real estate world, but it's just different. Like we're going to be talking today about healthy foods and just how to think about farming and sort of the particular niche you're in, how investors make money doing this type of thing. And like, I'm just really looking forward to learning about your world.
Love it.
And as a little intro, I actually got introduced to Marcus through a friend of mine, a really good friend of mine that I grew up with, Adam Pearson.
Yeah,
And this fella just said you got to meet Marcus and Vu and just talk to them about what they're doing. It's so cool.
man.
uh and yeah, so Adam Pearson, how I
He's the
knew you
man,
folks,
by the way. He's the absolute man.
yeah, yeah, well, that's how I knew you folks were the real deal is Adam is one of those lifelong friends who just you've known from when you were a kid, and you've been through stuff together, and or you've went through your fun days together. You've been on trips together. We traveled Europe together, and you really get to know someone and know their values.
That's right.
And Adam Pearson's one of the best guys I've ever met. And then he went on to, man, he built quite a resume. Like,
It's crazy. It's crazy, actually.
so I know this isn't about Adam. I'm going to send this to Adam after because
That
he's
is
going to get,
Adam. I love it.
but no, he did, if I'm, um, getting this correctly, he did an undergrad at Western, did
Right.
his MBA at INSEAD,
INSEAD. INSEAD.
INSEAD,
Yeah.
then went to Morgan Stanley. Oh no, then he went to,
JP
uh,
Morgan.
yeah, JP. Oh yeah, and then he did a stint at EY as well, I believe.
Yeah, that was
We'll
that
fill
was
in the gaps here
yeah.
because
Well, like I know a lot of the story because I studied for my CFA with Adam, and like it was
oh, you did.
crazy. Yeah, it was crazy because when I met him, he was at EY with Vu, who's my business partner. He um he had this vision for his career, and like I just got to watch him just nail every single gate. Just the most focused, disciplined, smart guy. So business at Western, got his chartered accountancy at EY, studied for the CFA with me and Vu. Um, while working at EY, went on to do his MBA at INSEAD, which is like,
Wait, you missed one little piece.
yeah,
INSEAD at the time had a three language fluency language
yeah,
requirement. Just quickly learn Spanish
yeah. He was
because
my
you have
roommate for four
to.
months while he was doing that, and like I saw how he did it, and it was just crazy. Like he'd work all day, like 12, 14 hours. He'd come home and just like watch Spanish language TV until he kind of had it. It was amazing. It was amazing.
Yeah,
I was like, this guy's nuts.
yeah. Yeah, he really, really was. Yeah, I had a friend who visited him in London, England, when
Yep.
he was doing when he was doing banking there, and he said when he gave him a few time options. It was like, I have, between 6:56 a.m. and 7:08, or I could do 1:08 to this time. And my friend who went to visit him said it was the funniest thing. It was like I had these like 8-minute sections that we could like get together and catch up. And I'll never forget, he said when we finished our catch up, he like Adam was like walking away, and then he like saw him running. Like he was running, literally running back to the office just to get to the next thing. It's just incredible amount of determination and
It's
the big
crazy. And
anyway.
then from there, he came back to Canada and worked at, PSP, big pension
Yes,
plan, and more
that's right.
recently went to the Abu Dhabi Investment Authority. So, I mean,
Yeah.
he's been just doing amazing things in his career, and that's how we know each other. It's pretty cool.
Exactly. So Adam, we were grabbing lunch, catching up, and he said, that he had really looked into you guys, might have invested some of his own money, and the level of scrutiny that you went under, Mark, you don't even know. And he was
Yeah.
up at night. So and his level of knowledge when it comes to due diligence, finance, and like looking at you folks and saying like this is the real deal. And then he came to me and just it kind of chatted a bit like you got to meet these guys. They're the real deal in this land space. And so that's how like when he made that intro, I was like, well, I got to take this seriously because he doesn't throw around, intros like that.
It's true.
So I'm looking forward to learning more
Yeah.
today. That's how we've come to know each other.
That's right. No, that's great context, man. I think that it's awesome actually reflecting on all that. But yeah, what a guy.
Yeah,
Um,
yeah. So
yeah,
what you're doing is very different. Why don't you um shape it up, pretend like you're talking to maybe like a grade 6 level
yeah,
person and just like explain what you're doing and how it's different.
yeah, for sure. So I mean, as you said, I think fundamentally we buy land. I mean, we're buying real property. It's agricultural land, so it is real estate. I think the asset class has some elements to it that are fairly unique. I think maybe fundamentally the main one is it's mostly land. So like there's not really the proportion of your investment that's just in land versus how much is in an improvement on the land is very different. It's vast majority is just land, and I think what that does relative to other forms of real estate is it means that generally there's not like a depreciation or obsolescence factor that you normally have with built structures. Um, but I mean that's relatively technical. I mean I think the easiest way for folks to really understand land is it's it's the physical substrate that we all live on. It's pretty intuitive for people to understand it. It's very limited, fixed in supply, and I think that's what gives it a lot of its investment characteristics that make it so unique, which we'll get into. Maybe it's helpful. I'll just start a little bit about my background, how I started investing in it,
Yeah, absolutely.
getting involved in the space, and yeah. So I mean, this is about the time that I met Adam. I was working at a firm called Bonneville Financial. I had started my career in commercial real estate. I started at Colliers, so very much in the more traditional CRE path. Spent about 8 months there. I got my real estate license. I really loved it. I thought I'd have a great career there, but I had this opportunity to join a firm called Bonneville Financial back in 2010. I ended up joining in 2011. And part of my interest in it was I want to be involved with something that was more niche, but had a chance to grow and become something more substantial as my career progressed. We graduated just after the great financial crisis. So I think a lot of folks had, a mentality of conservation and finding assets that were diversified and could protect wealth from, serious, significant global drawdowns and these sort of black swan events that, were so present in everyone's mind at the time. And one of the things that really jumped out to me during that time is when you looked at how different asset classes performed through the great financial crisis, there weren't a lot of havens, but one of the few asset classes that really did well, not only preserve value but continued to provide returns was farmland. And years later, my compression on this rationale: why does farmland perform well when everything else is going to hell in a handbasket? Well, it's because farmers don't panic sell their farms. Like that is their home, that is their livelihood. You don't panic sell it because there was a big drawdown in the Nasdaq one day.
Hmm.
It's generally very closely held in local markets. It's almost as if it's sealed off from the broader financial sector, and in many regards it is. So my experience early on in the space was really formulated by my time at Bonnetfield. Long story short, I joined the firm in 2011, April 2011. The firm had $10 million under management. It was mostly the founder's money. But over the ensuing 10 years, we were able to build that business's assets under management to about $1 billion, mostly funded by Canadian pension plans. We were kind of caught the wave on Canadian pension plans starting to allocate to the space, and we had a focus on building diversified portfolios of just bare row crop land. That was really the focus, and leasing it back on a cash basis primarily to farmers. And that was an awesome experience. I mean, for me, a guy in my 20s, I thought it was so cool. I got to travel to like, basically every farming region in Canada. Amazing people, like so many great farmers in this country that are doing like amazing work. Of course, it's super important, and I loved it. I think towards the end of my time there, one thing kind of stuck out to me. I was interested in food and nutrition personally, and I had this epiphany moment where I was like, man, like we're doing all these farmland deals, that's great, but like I would never eat anything that's kind of growing on these farms. That's kind of weird. And so when I took a step back, I was like, look, we're mostly investing in broadacre farms, so these are farms that grow corn and beans or wheat and canola primarily. And I was like, is there an opportunity to just really zero in and focus on land that's producing really healthy food that I would find in my fridge? And I spent a little bit of time when I was a kid living in on the West Coast, and I remember there were all these wonderful horticultural businesses, berry farms, and things of that nature in the West Coast. And we hadn't done any investing out there, and so we started dabbling a little bit while I was at Bonnetfield, in my later stages there. But it was clear it was never going to be the focus. The firm had a really defined investing philosophy around bare land, which is great. I mean, it did what it set out to do very very well. In 2020, the firm was being sold. I'd been there 10 years. So it was a great experience, but I wanted to do something on my own and really kind of go down this focus on health and really investing in the food system. I think that was something when I reflected on my career, it was quite important to me. And I said, look, if I'm going to spend my career doing something, I want it to be aligned with something I value. So left my gig at Bonnetfield in 2020. This was deep COVID.
And
Um,
what was your position when you
Uh,
left?
I was a chief investment officer at the time I left, so really the lead on the investing side of the business, which was super cool.
Wow.
Mm. Vu, who also I met. Well, I met Adam through Vu. Vu was a friend of mine from Western, one of my best friends, and he was at EY with Adam. So I met Adam because we were all studying for our CFA together. Vu was coming back from Dubai. He had gone there with Brookfield Asset Management. He had a great career, chartered accountant, working with Brookfield Asset Management, one of the biggest real asset investors in the world. So just like super
Yeah.
sharp, like dialed in, grade A operator. And he reached out to me in early 2021. He said he was coming back, and if he'd like to find a way to work with me. And basically, long story short, we launched our business in March 3rd, 2021. So Tuesday is our 5th anniversary, which is kind of cool.
Amazing. Oh,
Yeah.
amazing.
Yeah. And,
Wow,
you
5
know,
years.
yeah, it's crazy, man. And, yeah, launched early March, 6 weeks. We begged, we borrowed, we tried to raise as much money from anyone we could to make our first investment. And, that was this farm here. It's, large organic blueberry farm in BC. So it's a special one for
Beautiful.
us.
Nicely
And,
done, Marky. Nicely
yeah,
done.
thanks, man. I
Acquired a
appreciate.
farm, business is underway. You did it. You got off
Yeah.
the
Yeah, I mean, it was a crazy sprint, and we didn't have the luxury of having tons and tons of capital, so we raised just enough money to buy this farm. We borrowed, I think, 70% LTV to get it done, but I mean that was kind of fortuitous for us because 2021, you might remember, at the start of the year, inflation was supposed to be transitory. Turned out that wasn't true. Um, Land values and real estate prices, went nuts in 2021, as you probably recall. And so our investment in this farm, where we put 30% down, the equity performed phenomenally well because I think land prices in BC and Ontario moved 25% or so in that year alone. So it was a big jump, and we're like, man, that was great. So we went out and we kept raising capital. We ended up raising about $21 million of equity capital. Um, Primarily from high net worth investors, family offices. We, like, long story short, over 3 years, we built that our first partnerships balance sheet up to about 50 million in assets. And then in 2024, ultra high net worth family who were LPs of ours approached us and said, "Look, we really like what you're doing. We get it, but we don't really. We just like to own it ourselves. I mean, can we arrange that?" I was like, "Well, if you guys want to make an offer, sure." And they did, and we presented it to the rest of our investors. Said, "Look, here's the offer on the table. We think it's a good one." And our partners agreed that that was a good move. So basically, 3 years tip to tail, April 2021 to April 2024, 3-year holding period. Um, we had a realization event and an exit at the end of that, and that was great. I mean, that was a huge milestone for us, me and Vu personally. We returned a lot of capital to our investors, at least certainly for the time.
Are you
And
allowed to share the return?
yeah, I mean, so the broadly speaking, the gross return, if I think about people who invested day one was about 50% and the net return was about 36%. So if somebody invested $1 million in April of 2021, after all fees, they walked away with about 1.36 million in April 2024. So, and folks were happy with that because you probably remember like 21 to 24 was a pretty brutal vintage for private markets generally with the interest rate environment changing. It was for real estate very, very difficult. But most privates, anything that was in like private equity or these kind of private structures was very difficult. So for us, we were really happy with that result because what we had said to folks was farmland is a diversifier and inflation hedge, and it doesn't really behave the way other things in your portfolio do. And that proved to be the case. So we were really happy with that. Off the back of that, in 2024, um, we continued to partner with and manage the blueberry assets with the single family office, which has been great. And they were happy for us to continue pursuing our business. So we launched our Fund 2. We're pretty creative with the name. So Fund 1 and Fund 2. In Fund 2, we focused on the sweet cherry industry in the Okanagan. So we started with blueberries in the Fraser Valley, organic blueberries. We've moved on to sweet cherries in the Okanagan. Those are really the two primary sectors that we're focused on. But we've always carved out blueberries, cherries, and apples as
Very
sec-
niche. Right? This is a very niche sector within
yeah.
farming.
It's probably worth touching on that because I covered the whole sector in my prior life. So you can think about farmland in Canada. There's 160 million acres total. Probably two-thirds of that are really in Saskatchewan and Alberta. Like when you think about Canadian farming, broad open prairies, big machines, growing your traditional crops. So when you say Canadian farming, that's what people think. So the sector we focus on, the horticulture or fruit sector, it's way less than 1%, right? So the Fraser Valley has around 300,000 acres total of farmable land, the Okanagan, 25,000 acres total. And that's where I think two-thirds of fruit production in this country occurs in those two valleys in BC. And our thesis around this was the scarcity of those assets and the products that they can produce, in our view, provide a different coefficient relative to the factors that drive land values than pretty much anywhere else because of that constraint. So you have this constrained area that produces these specialty crops, and the Fraser Valley obviously contains Vancouver and its suburbs. So you have about 3 million people occupying this valley and growing. It's one of the faster growing regions in the country. Um, you probably know, like a lot of Canadian GDP is driven through immigration. So population density increases tend to happen quite quickly there. And the way the Canadian economy is set up, a lot of GDP growth helps fund our entitlement programs. So that tends to mean quite a lot of printing of money. So you have monetary expansion in the country as well. So our thesis is what's driven land values over time, and we suspect will be pretty durable, is more people, higher population density, more money in the system, very scarce supply of land. And as I said previously, all activity happens on land, right? As far as I'm aware.
And
So
also people have to eat too, right?
people,
Like
yeah, that's right.
like just the idea, like, to simplify it, like, I love the way you explained it. I also just have this idea running through my brain that, like, I don't foresee a time in which people are not gonna eat blueberries or apples or cherries.
Yeah, it turns out they're pretty good for you. I mean, it's
Yeah.
It's true, 100% true. And, I think what's happening demographically is you're starting to see a greater awareness around health and nutrition, greater interest in eating more nutrient dense foods for sure. One of the things we kind of took a step back and just thought about is like you can't really produce these products anywhere. The attributes have to be just right. And demand is increasing, population is increasing globally, but the areas that you can do a good job of this remain the same. So
And that's
long
because
term,
this is due to like weather conditions, positioning, soil, all these different things that you can't necessarily duplicate anywhere else, right?
exactly right. So these tender fruits, they need a clement climate to be productive. And so it's not just about can you grow some fruit. It's like can you grow enough to be economically viable? How's the quality? Are you close to markets? There's a lot of factors that go into it. Um, the Fraser Valley is probably the original commercialized area for blueberries because it has a slightly acidic soil. And
Mm.
that's really where the commercial blueberry industry, the high bush blueberry industry really took off. It was the largest subnational producer of blueberries in the world for a long period of time. That's changed these days. But our focus has been really around certain businesses that we thought had really good moats around their business. And that's normally a function of land. So for us, we started with organic blueberries. And the reason we liked it was our first farm is in a valley. It's adjacent to the Fraser Valley. It's called the Columbia Valley. And the thing we really liked about that was it's really hard to grow fruit organically for a variety of reasons. You need certain climatic conditions to be present. It's doubly difficult if you're surrounded by conventional growers because they have conventional inputs and conventional pesticides and herbicides that they can use, so they don't need to be as dialed in on their aphid control or their mite control and all these potential pests that they can control with basically very very heavy chemicals. You don't have the luxury of doing that in the organic space because you're using organic inputs. So if your neighbor is conventional and you're organic and they're just letting the aphids go crazy and they come and nuke them, you're going to take all that negative externality. So for us, what we liked about this business is because they're in this valley, our thesis was that we could consolidate the land around our farm. You could basically, block out potential competitors coming in, and you have this like hermetically sealed growing environment that you could have this organic production system. And as you said, as long as we're growing berries and people want to eat them, we've got a market. We've got a great production system that can produce this product. Happy days. And the same was true in a way in the Okanagan. Our thesis around that was the sweet cherry industry in the Okanagan. Um, what's really unique about it is because we're further north, our fruit starts coming on later. So, Washington State in the US is a massive producer of fruit crops, tree fruit, apples, cherries, you name it. They do a really good job of it. But because they run into the border, really their production falls off a cliff in August. Because we're further north in BC, a lot of our orchards are really geared around getting fruit in August. And the reason that's interesting is obviously there's way less supply, but you start having a big spike in demand in Asia because of the Mid Autumn Festival. So that's generally in September. And so the deal that a lot of these farmers have really focused on is the ocean freight deal, where they take their cherries, or normally really big, beautiful, high quality cherries that have huge demand in Asia. They put them on a ship, ocean freight. 4 weeks later, they arrive in China in September, right around Mid Autumn Festival, and it's like bonanza because in China red is the color of prosperity. Cherries are often given as gifts around that time.
Wow.
Yeah, it's got a cultural element to it. So as long as folks still think red is lucky and they're eating cherries in China around Mid Autumn Festival, I don't really see any reason why that might change. That's pretty much the only game in town. So that's kind of how we've tried to think about our investing. It's like we want to be partnered with some really great businesses, some great growers that have some kind of niche, some moat that they can defend. And with us, like that's kind of our goal. Like, look, we want to help you consolidate these assets so your business is defensible. You're set up to provide your customers with your amazing product. And there's relatively little competition if we're successful because there's only so much land, right? The That's really been the focus. And when it comes to, let's say, the Apple sector that we've also looked at, like we really looked at it in Ontario. And the reason we liked the Ontario Apple sector, we haven't done a deal yet, but the population centers are, in the east, right? That's really what the advantage is, because most of the apples in North America are grown in Washington state, but the freight cost to get them across the continent is about 30-40% of the cost. So
Right.
producing locally around the GTA, you have these massive population centers. Um, it's just a huge cost advantage, and the retailers like to say they're supporting local. They like to, and people like to consume it, right? So that's these are just some examples of some of the like the moats and the niches that we try to focus on. So it's a really really boiled down and specific focus within the broader farmland context.
And I like what you're saying because it's not like you're running out there saying, let's just buy up as many farms as we can. Like you're very, very specific about your agenda.
Yeah,
And it
yeah,
reminds me of um like Warren Buffett's strategy, like that he learned, I believe, from Benjamin Graham,
yeah.
uh,
The
in
goat.
the Intelligent Investor. What's that?
He's the goat for a reason, right?
Yeah, for investing. But it's the same idea to think about something with a moat around it. What's different about this business, and is it gonna be around for the next 50, 100 years?
Right.
What does it have to protect its intrinsic value? And
That's right.
that's very much how you're thinking about it. Sounds like you're very, very particular about what you're looking for and wouldn't like you're not too trigger happy on just going for any farm, anyone who wants to sell. You're thinking, no, we're looking at something very particular. I feel like you're the type of person that has no problem walking away from a deal if it doesn't fit your criteria.
Yeah, for sure. I mean, most yeah, no, I mean, yeah, for sure. 99% of like farmland deals are just they're not going to fit because our view is every additional deal we do just reinforces the advantage. So we want to really be focused. We want to focus our attention, our capital on these theses, and yeah, continue to build on our advantage and find ways to further that advantage. And that's something we've been looking at doing more this year, kind of approaching our fifth birthday. There's a couple things we have in the pipe that we're pretty excited about, and help us continue to just do that. Like, I mean, the relationships that we've built, the knowledge that we've built in these sectors, it's like it just gets better, right? It compounds over time, and yeah, I mean, we just think that there's a long way to go, and we're until the mission is accomplished, we're not really looking to take on another one.
Yeah, yeah, and it just it makes me think about, so you buy a farm, or you buy the land, you help the operator grow their revenue.
Yeah,
Mm. It's not gonna like 100x like a tech company would, or
no, no.
50x overnight. Um, but
Maybe over 30 or 40 years, but
yeah, yeah, exactly. So it's when people are thinking about where to invest their money, like maybe they do dabble a little bit of this, a little bit of that. When they allocate uh funds to someone like you and trust you with their funds, what are they expecting in their investment in terms of risk and opportunity?
yeah, no, it's a really great way to think about it. What is the risk reward? And we've always thought about it as basically being that's kind of like a triple threat. Like your downside scenario is you own land, right? So land has a very, very long history of preserving capital. I mean, if you go to Stats Canada and look at their farmland index, the average rate of appreciation on land since 1950, about 7% per year. So, they don't report on rents, but like let's just say 3% is like a bogey number. You could count on over that, 70-year period, give or take. You're looking at 10-ish% is your kind of expected return to own land over the long term. And there's that varies as good periods and bad periods, but generally there's very few periods where there have been drawdowns where you've really kind of like had the values decrease dramatically because it's scarce, right? And it's tightly held, and farmers don't panic sell their land. That's the reality. And um, That's kind of how we think about it as a base case. Like you own land, it's had this long term of performance. Our middle case is we're successful in kind of consolidating and operationalizing and improving these assets, so they're generating really attractive cash flow that we like to focus on. So we like to buy farmland assets, and we like to participate in the production and sales of those products, and we target cash on cash generation 6 to 8% is kind of how we think about it. So that's quite a bit higher than what you will generally find with bare row crop farmland investments. I mean, I would say most might have like a 2% cap rate in this environment if you're buying in Ontario, or maybe a little bit higher in the prairies, but that's generally true. Um, so like the middle case is you have this nice asset that can kick off really nice cash flow for the risk. And then the upside, and this is really what we're trying to do. And I think our first partnership was a perfect example of this. So there's quite a lot of interest from pension plans, family offices to allocate to this space. It's become more in vogue over the last 15 years since the GFC, for the reasons
Now,
I mentioned. I mean, A, it's
is this farm sector in general or your specific niche or both?
I would say the farm sector in general, like agriculture as an investment strategy, farmland as an investment strategy, of which permanent crops and our focus is a sub niche. I would say it's one that's interesting to folks because I think a lot of people can emotionally or personally relate to the idea of healthy food production. I would say like the vast majority of people who end up talking to us are like they got there because they had some intuition, they wanted to own farmland, and they are interested in health and food and the food system. So someone says talk to Marcus because that's kind of what he focuses on. They're like, oh, I get it. Like this is a way I can kind of combine the Venn diagram. I want the farmland, I want the risk return profile, but I like the values overlay of health and food, and I think that's really cool. So, um, but when you think about what these larger pools of capital need, they really need scale. Like I mean, and they need to do a deal that's big enough to make a meaningful difference for them. So, our what I say to our LPs is like, look, we work with close end funds, limited partnership vehicles that basically have an 8-year life. And I said, look, this vehicle is not going to be the forever owner of these assets, right? Because you probably know this, you have 50 people in an investment strategy. Not everyone's going to have the exact same preferences for liquidity and whether or not they stay in or stay out. People need their money at some point. So, our goal is to facilitate that. But I think like a really easy compression to think about what we're doing is we have a view of where the value is. We want to acquire specific assets that we have in our pipeline. We want to lease them to our partners who we think are the best in the business. We want to operationalize them, make investments that make them as good a farm as they can be. So we're putting a bow on it. We're building it up to scale, and we're kind of consolidating the opportunity into something that's investable. And then just like in our fund one, there's a, ultra high net worth family that had, a lot of concentration in the technology sector. And they said, look, I like what you're doing. This is values aligned for us. It's completely different. It makes sense for us to diversify a little bit because we're so concentrated into something that's just completely different, right? And I think feel fortunate that folks have trusted us to do that, and it's a good outcome. I mean, for me, what I like about it is like these really rare, valuable assets. They're owned by Canadians. They're held in Canada, and some of these families, and even things like pension plans or other asset consolidators. Um, that are there to benefit Canadians, right? And ultimately be good stewards, good owners of these assets. That's our goal. Like we don't ever want to sell them. Like we personally, we stay invested, and our plan is to stay invested our entire careers, maybe longer, God willing. And that's our view. It's like we're trying to create value by identifying the opportunity, executing on the transactions, optimizing the assets, getting them leased out, getting them performing, and then just saying, okay, who's the right forever owner? And that's really what we did with our first vehicle. It's what we're looking to do with our second vehicle. And so far, so good. Like our second vehicle, we closed on our fourth orchard in the Okanagan a couple weeks ago, end of January. So really happy with how that's been going. And
So to sort of summarize this from, so you have folks that will invest in your fund.
yeah,
That fund now has acquired 4 orchards
correct.
to have the proportional share in 4 separate orchards.
Yeah,
And then there will at some point be an exit in which their funds will be returned to them plus their return,
correct.
obviously.
Yeah,
And at that point, they can decide, let's get into the fund three and just keep
uh,
rolling it over, or they
that
could just take your cash and run. And I'm sure some people from your blueberry in the photo from your blueberry operation rolled over into fund two. Am
for
I?
sure. Yeah, it was about 50-50, and, which was great. I mean, we were super happy to have that support, and, the folks that needed the liquidity, and a lot of folks did. I mean, interest rates rose, people had mortgages, people had stuff to do, so I'm like, "We get it." Like, we were an investment option. We're super happy that people supported us, and we're thankful forever for that, and, we did what we set out to do. It's awesome. So, I mean,
Yeah.
that's a great feeling when
Yeah.
you just don't know when you start.
When you have half the people rolling into your next investment, I mean, it sounds like they were pretty pleased with the process and the return. That's
For sure.
interesting. And I think about it in terms of like my world. So it would be as though you have an individual who's got this amazing skill set on, say, like flipping small apartment buildings.
Sure.
And they
Yeah.
identify these small apartment buildings that aren't being run well. There's a bunch of vacant units. It needs some optimization. It needs some construction work done. Maybe there's a whole parking lot that's not being leased out properly. Just things with major potential, but in
Yeah.
fantastic locations that you can't duplicate anywhere else.
That's right.
And then we go, um, uh, um, raise the capital, buy uh, 5, 6 of these apartment buildings, bring them all up, get the investment, and then sell them off to, say, a REIT, and then return capital to our investors. Sort of what you're doing with farms.
Exactly. It's the same machinery, right? The same idea, just applied to a different sector. It's not, most folks are not focused in farmland and rural real estate. It's
Well, I was
um,
just going to say that, like, what an interesting, like, person you are. It's like
thanks,
I've
man.
never one like I know a lot of people that flip properties, or a lot of people in construction building, purpose built whatever, or
Yeah.
developing interesting things or building interesting things. You're the only person that I know, not only doing this in the farm space, but also having this like hyper niched, like less than 1% of the farming sector look and focus at a very specific asset class, and to have a level of knowledge where you would never say this because you're a humble person, but that you probably think like no one else has the level of knowledge I have in this specific horticultural sector.
I guess nobody's nerded out as hard on this kind of stuff as I
That's what
for
I'm
the last
saying.
15 years, right? So,
I feel like there's no question I could ask you about these orchards that you wouldn't know. Um,
well, for
but that's
sure.
so interesting.
The
It's
one
just
thing I
that's
would,
why you're here chatting with us. Like it's just
yeah.
like I don't know anybody else doing this.
Yeah, I mean, I so far, me neither. I mean, maybe down south of the border, there's some folks that maybe focus on it, but there's a real focus, I think, in agriculture generally, in like growing your asset base and growing your AUM, and I mean, that's cool, but like we're really focused on these specific opportunities and these products, right? And that's how we've been building our business. We're kind of looking forward to the next step here. And I think the one thing I would say that maybe is a little different is we have an extremely personally extremely long-term view on how we want to hold these assets. We never want to sell them ourselves. So like I mean, I've got majority of my personal balance sheet into, this farm and our cherry orchards. I I like the idea of owning them forever. It's a Charlie Munger quote. The number one thing to do in compounding is do not interrupt the compounding. Let it do its thing, right? Leave it alone. And that's, I mean, as we want to be good owners, we want to be good owners. We want to kind of nurture these assets, help them be as productive and successful as possible. Um, and as you go along in time, you see different ways of doing it, and I think that's different opportunities that kind of stem from our involvement here. We're building more and more surface area, like literally in this space, and it's just giving us more opportunities to kind of incrementally build on, add value to what we're doing. So when you do that. like, why would you sell it, right? I mean, for me, I don't want to sell it. I want to keep building value. I want to keep compounding value, and it's nice because it's like there's no like shiny object that I really care more about. It's like this is like I eat the food from these farms myself. It's in my fridge. It's something I'm really passionate
How does
about.
it taste?
Oh, it's incredible. I mean, it's like one of the things we did last year that was super fun, and it's kind of tied into how we're thinking about our kind of go forward. Like we had these like maybe 100 folks that had invested with us. We'd gone through 5 seasons, and not a single investor had tried a blueberry. And I was like, man, that's crazy. It's like a travesty. So we were like, how can we solve that? So we did a test, like, we actually ended up, we ended up freeze drying, like,
Nice.
a bunch of our berries, and, like, honestly, man, like, we thought it'd be, like, a fun experiment, we sent them out to our investors, we gave them to people, and, like, people loved it, it was so cool, because
Waiting for mine in the mail, by the way.
absolutely, buddy, I mean, it must have made a stop somewhere, but, yeah, we'll correct that.
Well, how did they respond when you sent them their own, blueberries?
Oh, it's phenomenal. It's such a hack because, you can intellectualize owning farms and investments, risk return, but like everybody connects to food, right? They understand it. So what the fact that we have control, I think our farms are doing like something over 50% of all the organic blueberry production in BC. We have like this amazing environment. Our farmers are incredible. Like I spend a lot of time there in the summers. I just love it. So you can kind of you literally can bottle that magic, right, with freeze drying. It's a cool, really cool process, really cool technique, and it preserves the health benefits, and it the flavor profile is amazing. Basically intensifies it, and you have this like crunchy snack. So people loved it, and it ended up getting into the hands of all sorts of folks that we didn't anticipate beyond our initial investors, and it just brought a lot of folks and interest into what we're doing because people can connect with the idea of food and high quality food and nutrition and health. I mean, it's so interesting. Like a lot of folks come to it from the health angle. They had some experience themselves. Like maybe they had some physical transformation. Maybe they were battling cancer, bowel issues, and they're like, well, I got to eat more plant-based, more fiber, more healthy. It's like amazing to see how many people relate to health and food through these different experiences that they have. It was super cool. And it's one of the things that we're doing this year that's a little bit different. It was such a good experiment. We're going to run a way bigger one. And little teaser for you, Sean. Like next week, right before our 5th birthday, so we've set up a Shopify store, so folks can order it, right? Because it was a bit of chaos last year. We just like had a whole bunch of boxes show up in my office here in Toronto, and I'm like licking stamps to some of the people. I'm like, we'll just build some structure around it. But it's cool. Like I think it's a unique product. Like, nobody else can really do it because like they're not producing organic fruit the same way. So we're really stoked about that, and we're selling honey through that store too, and this kind of ties into something that's new that we're doing this year as well. Like we've been looking at um we have this idea, like we own these farmland assets, like the physical substrate, which has been awesome, but before the farm and after the farm and the supply chain, there's these businesses that are critical to the inputs and the outputs, dealing with them to bring these products to market. So we started looking at some of these businesses, and the first one we started looking at were our beekeeping businesses, like these beekeepers that provide us with their hives to help pollinate the fruit. It's a critical input for most fruit crops. And in April, May, we're renting hives from beekeepers to come drop them into our farms to make sure pollination happens. And what was crazy to me was how productive our farms became the more and more and more we invested into this input.
Mm.
Pollination means more buds get pollinated. Every bud becomes a berry, and just saturating your farm with pollinators is an amazing way to just get the most out of it, both in quantity and quality, because fruit quality tends to be superior with adequate pollination as well. So we started getting to know this industry, started last year, and getting to know the beekeeper that we work with. The thing is, this guy's about 50, but all of his competitors are about 70, and they don't have an exit strategy. So we started looking at, some side deals that we could do to help support our beekeeper, really to help make sure that our farms were going to have this critical input for the long term. And yeah, it's led to us kind of working on, and hopefully in the next month or two, kind of concluding our first deal. It's a bit of a sidecar, but it's cool. I mean, it's just like another super healthy product that kind of we can add to our repertoire, gets us vertically integrated. It's been awesome. So I mean, there's just lots that's
Heard it,
happening.
you heard it at the Umber Talks podcast first.
That's right. Couple of novel drops there for the audience. But yeah, I mean, Shopify store, getting into some of these adjacent businesses like beekeeping. It's been a lot of fun. I mean, I'm really excited about it
Well, I'm just hearing like it's just a lot of passion in the product and the production of the product,
for
which
sure.
which which helps me think someone like you're thinking about farms all day, healthy food products. It's just interesting from the perspective of an investor. Like if someone were to give you $1 million to put into your fund to support these farms, support the growth of this food,
Right.
they're probably going to be thinking about, maybe not, but likely they're going to be thinking about the healthy food production, maybe order some of the blueberries, the freeze dried blueberries, just get into that lifestyle. They might put a plaque like you have, it's pretty cool. I own, whatever, these
Yeah,
orchards. And it just gets the wheels turning in terms of like healthy lifestyle, healthy investing, good, safe return. Like, and it almost brings in the like biophilic aspect of it as well. Like you have I see you have the sort of the plant, and like it just all goes along with healthy lifestyle, healthy air, healthy, bees, honey,
for sure.
antioxidants,
Man, Sean, I gotta say, maybe the most gratifying thing for me in this kind of entrepreneurial journey is like the identity shift, right? I mean, focusing on investing in healthy food systems, you have to live the part, and it's crazy, right? It's like there's this kind of manifestation that kind of goes on when you're thinking about it all day. You start living in a way that's aligned with it. Everything feels better when there's alignment through how you live your life, the work you do, how you eat, how you take care of your body, and it's just like it's really gratifying. I feel like everything I'm doing is aligned with who I am, and I think it's just like such a privilege, right? I mean, I couldn't be happier.
that's amazing. So my theory is correct then. Okay.
You're bang on, man. It's
So let me ask you this because I know you're a gym goer. Did
yeah,
you, when you got into the this specific niche space, did you start going to the gym more and just thinking
one
about,
hundred, one hundred
yeah,
percent. Like, think,
that's
yeah. I mean, it's honestly it's been great. It's like, I eat a lot of blueberries, man. I mean, as you know, it's big in recovery. I think
yeah,
what I honestly, personally, I love having freeze dried blueberries. So I can eat my own blueberries year round now, not just when they're fresh. Because you
right.
know, um, everyone's a little skeptical. They go to the grocery store in like January, February, like these berries came forth from 4,000 kilometers away. Like sometimes they're good, sometimes they're bad, sometimes they're moldy, sometimes they're not. But for me, I'm like, if there's any question, I'm like, I know what I'm eating. I know how these were
Yeah,
grown. I know they're
freeze
consistent.
dried.
So yeah, it's been
I've never
awesome.
had
And
freeze dried blueberries.
yeah, oh dude, like they're great. Like I said, I gotta get you a box, man. I mean, it's
This is,
awesome. It's
but got to
honestly,
taste it.
it's been so cool. Like this kind of side of our business, like it's kind of helping us connect with all different kinds of folks. Like I think I shared this week on LinkedIn. Like we formed like an advisory group at
Yeah,
Shire to
tell
help.
me, advisor group. Who did you bring on, and what's their role, and what are you doing?
Yeah, so some awesome guys. So I was introduced to these folks. Some have been friends for a while, but everyone was really aligned around food and nutrition and the kind of impact it could make. And all of us have kids as well, so we kind of have this sense that like we want our kids to be eating well and making sure we can get the highest quality food into our own diets, our own family's diets, and our friends and family. So was lucky to meet a fellow called Mike Matheson. He's a current NHL player with the Montreal Canadiens, like super great guy. And like he was interested because like obviously he's just like been so focused on human performance and nutrition as part of what he does. It just struck a chord with him, and we were introduced through a mutual friend and through a couple of conversations. He was just really keen to be like, look, I love what you're doing. I want to figure out a way to be supportive and help. And I said, look, we're trying to form an advisory group this year to help us think through this next stage of our business. Would love to have you involved. I mean, his experiences and credibility as a professional athlete, who literally he makes his money based on how he takes care of his body. It was just awesome, super great alignment.
Wow.
Other fellow who, yeah, I mean, other fellow who's agreed to join and has been awesome is Dr. David Lawrence. He's a longtime friend of mine. Like we played rugby together back in Western, but I mean, he's just a brilliant guy. He's a physician. I mean, he's got so many jobs. It's kind of crazy, but like I think the highest profile one is the lead physician for the Toronto Blue Jays. So like his athlete population is like, civilian population. He comes at food and nutrition and health from a clinical background, and like I mean, he's just so immersed in the
Yeah.
literature, the data, and his clinical lived experience, and just benefiting from that perspective as to how these sort of interventions can make a big difference. It was funny, like earlier this week, someone sent me an article that Dalhousie, they're running an experiment on doctors prescribing blueberries for health. And I was like,
Come on.
no, perfect, right? I mean, it was ideal. Yeah, it was super cool. And like, he's the kind of guy that can help interpret that kind of stuff and like how it makes a difference and how it doesn't, and kind of get away from like the hypey stuff and just really focus on the facts and the evidence. And the third guy is a really close friend of mine, Jason Lacombe. He's a founder. He founded a firm called Veritrack in the UK. He's back in Toronto now, still the CEO there, operates it. But I mean, they were his business is focused on technology and transparency in the pharmaceutical supply chain. So just helping pharmaceutical manufacturers have greater transparency and auditability, traceability around how their products get manufactured, the custody chain, all the way to end user, and just him helping us think through how those lessons in that kind of supply chain can apply to what we're doing in agriculture. Because I think the more people are starting to become aware of the impact of nutrition, the more they care about where their food comes from. Like, what's the story behind it? Yeah, I want to know. I don't want to have a question mark when I put something to my body that it's good. I don't want to hope. I don't, I don't even really want to rely on regulatory bodies that just stamp a sticker on it. I would rather know. So, I mean, his experiences on the supply chain side and the operational side have been awesome. I mean, like, he's advised me for a long time. He's a very close friend. So it's a lot of, formalizing it. And we've had our first couple of sessions, and a lot of it is really around positioning, what is it about these products? Like, how can they best be used from a performance perspective? Like, what kind of education and information do you want to package with it that kind of makes it compelling? And for sure, like, these guys are super credible. They got great networks and help us raise awareness about what we're doing. I mean, that's a big thing. But man, it's so funny. It's just one of those things that seems so obvious that you just like don't do it enough, like stretching. It's like, oh, I should totally do that. But like, yeah, having an advisory group, getting folks that are, from different walks of life, different professions, see things differently, of different networks, and just, just that perspective they can provide has been so good. So, I
What
mean,
an
we're fired up.
incredible life you
Yeah,
got there.
yeah,
Wow.
it's great. It's great, man. Like, they're just great guys, and I'm just super happy that they're happy to help, man. And that's the thing. Like, people want to help. Like, if you're doing something that people can relate to, they want to find a way to help. It's just like, can you create some structure so that people can see that their effort is valuable, that there's some KPIs they can track, and that's really what we've been trying to focus on. Like, what are the KPIs we can keep an eye on and help us?
And what a value add to, when you approach a farmer, and
Yeah,
that how I understand your business is that you buy the land and then you help them grow their business, the farmer, and then you
yeah,
participate in some type of revenue share structure.
that's
Um,
right.
what a value add coming to the table and not just saying, because I think Bonneville, their business model is just, we're just going to buy the land, you lease it back, operate your farm. Whereas
Yeah.
you're coming in and saying, okay, we're going to buy the land. And, obviously you're going to pay a fee to operate your farm. But we're also going to put this rocket fuel on top of your production and your marketing, your distribution with this advisory group, your knowledge, take to market. Like even the blueberries just show me like beautiful packaging, like ready to go. Um, what a value add when you approach the farmer.
Yeah, I mean, I think so. It's still early days. Like, we've been incrementally kind of improving and on thinking about. We thought about this for years. It's not always been obvious how we do it. when you're starting out, you got to stay super focused. Like we're still super focused, but we've built enough of a balance sheet now. Where we're like, look, we've kind of consolidated the opportunity. We know we control it, and and we're aligned, right? I mean, with our farmer, we're very aligned. We participate on revenue, and so revenue from a farm, like generally, maybe there's some other ways, but the main two factors are how much did you grow, what did you sell it for? And I'll tell you, farmers are amazing at growing more. Like they'll kill themselves to increase their production by 2%. Most don't think too much about how they can sell it for more. And I think that's kind of where we're like, well, maybe we can help you out. Maybe there's ways we can, um, leverage our networks and things that are obviously it's the same thing, right? They're from an agricultural community. They're focused on agronomy, being great stewards of the land, great stewards of the plants, and taking care of business there. By the way, the farm season is insanely stressful. Like they're flat out when things are happening there. There's not a lot of extra time to think about like, hey, maybe I could think about how I can sell this, right? It's like it's a rare beast that can do all those things. So I mean, I'd like to think that there's some opportunity there for us to help increase the profile of the products that are being grown here in Canada, right? I mean, I think there's also this idea of this interest in Canada becoming more of a self-reliant nation, a country that has so much in terms of our natural blessings, and there's a huge interest in looking for ways to capitalize on what we produce right here at home for Canadians and for markets abroad. I mean, I think we're all for trade, and a big part of it for me is you got to complete the circle. You got to help people understand where the quality is, where the value is in their food system. You got to close the gap, helping them access it. It's fun. I mean, I don't think there's a lot of farmland investors that have really done this. So it's like for us, it's novel. It's just a really fun way for us to connect with all sorts of different folks. Because like when you're in the asset management, investment management space, you're normally in a very, very narrow lane. You're talking to advisors, wealth managers, folks that are professional investors, which is cool. But 99 out of 100 people you talk to are going to have no idea or no interest in what you're doing. Everybody eats. So, you
Yeah,
can connect with folks in a very different vein. It's a
for sure.
pleasure, right? It changes the nature of the conversations you can have.
So if someone came to you and said, "Okay, I want to invest in your fund," and I love the idea that if I give you $1 million in a few years, I would have 1,360 in 3 years. I think that was that you mentioned.
Hopefully, yeah.
Yeah, yeah.
No,
Um,
no promises. But we'll do our
no,
best.
never any problem. But you explained the low side, the mid side, the high side. But if they just say, you know what, I love this. I'm putting in $1 million. What would be the next like 30 days, 60 days look like for them? How would it work? Like
Yeah,
it from an
yeah. I
administrative
mean,
perspective.
for sure. I think first things first is like eligibility. So we operate as a asset manager in the exempt market. So the exempt market is what it means is these investment products are for accredited investors only. And this is regulation that's designed to protect investors from nefarious actors in the financial space. Overall good intentions, like people have different views on the regulations, but they are what they are, and that's how we operate. So accredited investor status is um, paramount before someone's considering this, because there's no guarantees, there's no protections. It's important to know who you're dealing with and what you're dealing with. So first things first, caveat emptor, it's accredited investor exempt market space. But generally speaking, the process is they're introduced to us, we have a conversation. And remember, we run a limited partnership. So folks that invest with us are literally our partners, right? So we meet them. We want to know our investors and our partners. So a meeting for sure. We provide folks with materials for them to review. Generally, there's an offering memorandum and other supporting documentation about what is the partnership's objective, what are we doing, what's our track record, who are we, what's our story. That's all in there. But generally speaking, somebody reviews that material and they decide, hey, I want to invest. It's very simple. So there's a limited partnership agreement. That's the governing agreement of the limited partnership. And there's a subscription agreement. So somebody who wants to invest basically subscribes through the subscription agreement, they say, I want to invest this amount of dollars for this many units of the partnership. They check all the required documentation, certifying that they are accredited investors, and they submit it to us. That's it. That's basically it. They fill the subscription agreement out, and they're now committed. The next step is to fund their investment. So our lawyers have wire instructions. They send it, and it's sent to our lawyer's bank account in trust. And we will basically, the lawyers close the round on a specific date, and that's the date of record that they became a partner. And what do they get in return? They get a nice certificate saying that you own this many units in this partnership. And really, that's it. It's obviously they're limited partners, so they have limited liability and they're passive. And what we do to communicate with folks is we have a biweekly newsletter that we send out. That's a lot of fun. It just keeps people up to date on everything that's happening at the farms and with our business. And more officially, we do annual audited financial statements, which are sent out March 31st of every year, just documenting exactly what happened on the balance sheet and the income statement, cash flow side of the partnership, really pertaining to the land. We provide an annual report, we provide capital account statements, and we provide tax receipts, T5013 tax returns for people to fill their taxes, and that's it. It's quite simple, and once you kind of cut through the nuances around it, the actual process is very, very simple. So um, that's basically it. And yeah, I mean, it's been awesome. Every time we bring someone on board, it's a new partner, right? And so it's great where we have alignment. It's great where we can have a conversation and share exactly what the objectives are of the partnership and build a relationship. And I think generally speaking, that's where we've had the best success. Like folks are really into what we're doing. They believe in the vision of consolidating these assets and producing healthy food at the end of the day. Um, it's great. It's been fun to be a part of it, and a lot of friends and family, of course, have supported us, and a lot of people have become friends through the process. So it's been great. Yeah,
Someone had a question like how's your fund structure? Like, could they just call up Marcus and chat with him about anything really?
for sure. I mean, we're the general partners of the partnership, and so it's our task to have a
I
fiduciary
say
responsibility.
anything farm related.
And yeah, yeah. Hopefully related to the investment
Yeah, I'm having a
and
problem with my car, Marcus. You know
yeah,
anything about brakes?
I'm not a great mechanic, but I'll try to put you in touch with somebody. But yeah, I mean
Uh,
for sure. We're available obviously to talk about the business of the partnership with our partners at any time. We're accessible, and we have a fiduciary obligation to serve the best interests of our partners, and we take that very seriously.
it's interesting you talk about that. When I sit down with somebody who's either selling a property with us or buying a property with us, like us as real estate agents, it's the same fiduciary duty we owe them to act in their best interest, be clear with them, be honest with them, give them all the information. And when I'm sitting down with someone like I want to sign on with you to go buy a property, like we stop there and talk about this is how the relationship is governed. This is
Yeah,
what I you. So it's interesting that you bring that up because it's really important, and I think folks in our industry should be talking about that more,
for sure.
or even better understand the duty that they owe to their client. So
100%. I mean, you know what? It's the level of trust required for someone to commit like a large sum of money in your care for a long period of time is enormous. And so I think, being forthright, honest, and having those communications early with folks, absolutely critical. And then your integrity is really what's going to carry the day. So,
yeah.
yeah, it's been a real pleasure in terms of making the relationships and connections that we've been able to through our first 5 years. It's been awesome. And I mean, what can I say, man? I'm just really happy to be doing what we're doing, and I'm looking forward to what's next. It's been a really great run.
Well, I feel like you're going to look back at your life, Marcus, and say, wow, my mission was, you know, um, it was positive and it was intentional. It sounds like. and made the world a better place. It's
Well,
like,
I hope so. One pound of blueberries at a time, right? And
yeah,
just, making sure people are getting good food to eat. It always occurred to me as something that sounds humble and basic, but obviously it benefits people tremendously. I think folks that have had any experience focusing on nutrition, they know it makes a huge difference. So
oh
making
yeah,
that more available, more abundant, and more accessible.
yeah,
To me,
exactly.
it's a worthwhile cause.
We should do a podcast number 2 on a farm. Okay,
Yeah,
with blueberry backdrop. I'm
dude.
seeing berries on a table in front of us.
100% August. I mean, it's a great time to be out there in August. It's like beautiful, sun is shining. Like, I mean, we'll hang out here, have a barbecue. Our farm in Langley is beautiful. It's just awesome, man. Like, it's just like, it's so great. Like, you're just with friends. You're in the wide open spaces. You're breathing the fresh air. You're eating the freshest fruit, the highest quality fruit. In my view, in the world, I think it gets a lot better. And man, it's just a great way to live your life, right? Good food, good company, good space. It's hard to
So
beat.
we'll have you, myself, the
Yep,
farmer, okay,
absolutely.
maybe one of your advisors,
Yeah, yeah,
and
yeah.
Adam Pearson.
Bring the whole crew. Gotta bring Adam, man. Gotta
Yeah,
bring Adam. He's
I
I,
do,
I
of
don't
course.
I don't think we sent him a pack of blueberries either. It was a long way to go to Abu Dhabi. So I think
That is a long way to send blueberries.
well, you know what? When they're freeze dried, it's actually not a problem because it's light. It's 1/10 the
True.
weight
Just send
and
in the water.
just as healthy. So, that's I should hit him up because I don't think they grow a lot of them over there.
No, I don't think so, in the desert. Marcus, absolute pleasure having you on here. It was really
Thanks,
cool
man.
hearing your story. I learned a ton today. I look forward to seeing you grow.
Thanks, Shaun. I appreciate it, man. It's been great getting to know you and talk shop and appreciate the interest you've had and all the support. I'm looking forward to sending you some of the product, my man. I think you need to try some and see for yourself.
Absolutely. Absolutely. Until next time, my friend.
Until next time, Shaun.
Yeah.
Thanks, man.
Yeah. Thanks for coming.
Bye for now.
Thank you for tuning into Umber Talks. Don't forget to follow the show and share with a friend you think would love this episode. See you next time. Bye.